Okay, should have sound now. You can go ahead and let me know. Thanks. Thanks for everybody letting me know. Okay, perfect. Sorry about that. All right, thanks everybody. All right, so obviously Game Edge US joined us there. We haven't talked about anything yet for our pre-market prep, so sign up and those will be provided for your email. All right, moving on. The market trend model, obviously, this is one of our three pillars. Trend, we saw it was weakening on Friday. So our market trend model is based on the tick index, buying versus selling within the overall market. This is our tick US. This is all regional exchanges, basically what we call the kitchen sink. So it's a little bit more noisier, but we wanted to monitor this also. Again, orientation here, the bolded white line is our cumulative tick. That's intraday instantaneous. And then the what we call the railroad track, shorter term moving averages. Again, if you sign up for our education, you'll find out about all of this. But again, if we're below that, again, the momentum is usually dropping. There's more selling occurring than buying in the overall market. And then up here, breadth indicator, new highs versus new lows. New highs were outpacing new lows, but not by a significant margin as you've seen the previous day. And then our filtered cumulative tick plus 1,000, minus 1,000 larger block orders by institutions or market participants was well below zero and trending down, kind of that screenshot I posted this morning. So this was indicating that obviously institutions and larger market participants are exiting and more selling was occurring than buying. And then our cumulative tick was down towards minus 100,000, which is pretty significant to the downside. So again, weakening on Friday, basically this tells us to be cautionary, protect capital, and reduce risk in the overall market. Now, we'll look at the colored ribbon, which is our longer look back period. We're still above that. Again, this is 30-day positioning, longer positioning of your money within the overall market and risk. So we're still above that colored ribbon. So we'll be watching that intently to see if the bolded CT starts cutting into the colored ribbon, obviously indicating that we could have a larger move to the downside. Moving to our tick RC, this is a little bit more quality tick. Again, this is what we base our P-Trans to PGEX mechanical portfolio on. And if we're above the overall ribbon, then our mechanical portfolio is still on. So we're weakened here versus the railroad tracks and the shorter term look, but then our overall look is still strong. So we'll continue to watch this. If we see this bolded white CT start cutting into the colored ribbon and then emerging to the downside, that would obviously turn our overall mechanical portfolio off. And then we really start managing risk and protecting more capital within your overall portfolio. So again, we're at basically an inflection point. Most likely, we talked about the weakness on Friday. Hopefully this helped you protect some of your capital or reduce risk in the overall market. And then we'll see what happens from this point moving forward. Moving on the SPXA, this is our cruise ships, larger market participants with positioning. So we separate the SPXA and the SPXP. Again, these contracts don't turn over as rapidly as the SPXP, so this is your 40,000 foot view of the market participants moving the cruise ships or larger tankers around. Again, call dominated above and below spot price. You see where transition is. We were hovering above transition all last week, and now we're going to be below transition and in the overall transition area here via the blue box and then the overall white box. And 6,400 to the downside is where we'll be obviously close to that when we open, probably slightly below it. So we'll see if this structure erodes after today's price action as well as this week's price action, or do larger market participants stay entrenched with the call dominated structure. What we'll see on erosion would be these out of the money calls start to either be closed, and that would expose the in the money puts above us. So all of this green net delta, you start turning a spattering of red, as well as out of the money put hedging. These are in the money calls if they're below spot price. So if these in the money calls start to erode and see some monetization or closing, that would expose out of the money put hedging, and this would start to turn red also. So again, we'll monitor this day over day for any change, but as of now, we're call dominated via the SPXA and larger market participants. One little caution, yellow light or flag is our SPXA gamma edge ratio, or what we call GEX ratio. This gives us the call gamma versus put gamma in the overall complex, and this red dotted line is that ratio. If it is falling, that is indicating that the call gamma is leaving the overall complex. and giving way to, say, the put gamma. Again, we're we're above 1, so that indicating that call speculators are still in control, as well as bulls, but we'll continue to watch this. If this continues to drop, then obviously we start to be a little bit more cautionary. And then the divergence we were seeing as the SPX was making all-time highs, we started to see the GEX ratio, or the gamma edge ratio, start to drop. So indicating that that out of the money call speculation was starting to dry up and wane a little bit. So this is just a yellow flag or cautionary, and this resolves one of two ways. Spot price continues to come down as the out of the money call speculation drops and the out of the money put hedging starts to increase, or we'll see the spot price go sideways and then the GEX ratio start to rebound back to the upside as that out of the money call speculation comes back in. So we'll just keep an eye on this, again, day over day. SPXP, these are our speed boats. Obviously, these contracts turn over much more rapidly, as you see here via our web app, and you can click these tiles and turn them on and off. You'll notice the expected move has expanded pretty significantly here from last week, from 0.4, 0.5, 0.6 to 1.2 now, or 80 points. And then we're call dominated above and below spot price, but you'll notice the erosion of the left-hand plane, which is below spot price and will now be well below spot price if we open below 6,400. This is those in the money calls eroding and that out of the money put hedging coming in. As those out of the money puts open, you'll still notice that in the money calls, or out of the money calls, sorry, speculation above us is still alive and well, but I would anticipate some of this to probably erode away today as spot price will be below 6,400. So again, this is our first kind of fly in the ointment, or our first yellow flag when this complex starts to erode. This was green net delta, totally call dominated last week, above and below spot price, but then we started seeing some chinks in the armor as we were discussing really last week. Starting on Tuesday, Wednesday, again, as we were making all-time highs, and then into Thursday, Friday, we were seeing some of that out of the money put speculation start to come in and some hedging to the downside. All right, moving on to the SPXP GEX ratio, or gamma edge ratio. Again, we were talking about this falling. That's indicating out of the money call speculation starting to dry up or wane to the upside. And then out of the money put hedging is starting to come into the overall complex, overriding those in the money calls below us. We're still above 1, but barely. Obviously, that gives the bulls a slight edge and call speculators. But if we start dropping below 1, obviously that would turn a little more bearish, indicating that call speculation is leaving, and then put speculation is coming into the overall structure. You'll notice that back down here on the 21st, when we reached 0.7, and historically 0.6, 0.7 has been an area where we'll bounce back to the upside. So we'll watch this if we do drop below 1 today and start heading down to that 0.6, 0.7 level. Moving on to the SPXP Delta Balance. All of our charts are interactive here at Gamma Edge, so you can click and zoom in. Again, this is what we were discussing last week, was that out of the money speculation dropping. This was heading into today, which is Tuesday, but then we were discussing on Friday, Thursday heading into Friday, that negative slope in the right-hand plane. Again, out of the money call speculation via the green dotted line. Now, the left-hand plane was increasing and our delta balance was at 1, but out in time, we were seeing a slight drop in weakness. So we were discussing that. But really, this is what we want to watch, that out of the money call speculation. When it starts to drop, most likely spot price cannot proceed higher. And we'll see some most likely consolidation, or then that turns into an overall pullback as both planes start dropping. So our projection for the rest of this week, obviously, is weakness into Wednesday and into Thursday, and then possible rebound towards the end of the week. Again, this could change with our overall positioning today as we see spot price continue to drop below 6,400. So we'll continue to monitor that day over day and keep you abreast of the situation if we do continue to see weakness past Thursday and the structure continue to erode. The net stack command, I ran this just a few minutes ago as price was approaching 6,400. I ran it at 6,401, and you'll see that we changed from that call dominated, which you'll see on the SPXP here, to put dominated in both planes. So again, 6,400 to the downside, that's where out of the money puts are. If we're below those, we'll capture that negative net delta. And then you see Charm at 63.25. Obviously, that's significantly below where spot price is, but those are out of the money puts. If we're above that level, those would be supportive. And then you see in the money puts at 64.50. Below that, those would most likely be a headwind. But you see this large left or right-hand plane integral of in the money puts. Again, that'll be a significant weight overhead. That's up towards 6,500. So a large dispersion away from where spot price is now. And then we see gamma 6400, 6420. So again, that's our sensitivity levels there. So below 6400, again, we could continue to the downside. So we'll watch those. These will be updated after the open, as well as when spot price continues to move. We have these automated for our members. And then we see Vanna. We have the opportunity, obviously, if the volatility does drop. Obviously, it's spiking this morning. I think VIX was hitting roughly 18. So if we do see the volatility drop, this could help us also with a slight move back to the upside. So we'll continue to watch that. SPX P0DT, so game plan heading into today. Obviously, drunken sailor range, very large. Talked about our expected move here. Transition 6460 to 6475. So as of this time, we are below 6400. So let me check that. So we're still 6387. So we'll be below 6400. So all of these puts here, or sorry, calls here are now out of the money, and we're dropping below that 6400. Obviously, capturing more negative net delta via these puts here. So that will be that first overhead hurdle to overcome at 6400. And then the next most likely stalling or rejection area would be that 6425. That's our index level. So as you saw this morning, as we dropped through 6425, we started accelerating to the downside towards 6400. So the game plan would be most likely look for a rejection back up towards 6425, depending on what our intraday volumetrics are telling us. And then if we get back within the overall drunken sailor range, it will be extremely choppy, as we could traverse back towards the transition area. And then we'd not anticipate us to get back over the transition area unless we see significant out of the money call speculation, as well as a significant amount of puts closing at the same time. So that would be another rejection area. And if we continue to the downside with our market trend model, those would be two shorting areas, good possibilities. So we'll continue to watch that. If we do get back above transition, which highly likely that we may not, then we would continue to be bearish and cautionary to the downside. And these would provide multiple opportunities to get involved for a possible pushback down. So we'll continue to monitor that via our vol metrics, via our vol M command. That'll let us know where the massive market participants are transacting the options contracts, and if they're speculating higher or lower, or we're just seeing an overall consolidation day after this large move down. So we'll watch that. And then moving on to the trading view chart. So I've pretty much outlined that obviously via our drunken sailor range and our transitions up here, and then our trading view script. So you see 6400, obviously large level that we need to traverse back above. So that would be the first rejection. If we're above 6400, we'd be looking for a move back up towards 6425. That'd be the next rejection area. And then if we're in the overall drunken sailor range, we'll be at the mercy of those intraday volume market participants transactions. So then we could move back up towards transition, or just chop around within this overall structure of drunken sailor. Let's move on to some individual equities. Obviously, with the large gap down this morning. Now let me turn on extended here. I'm seeing, going through this overall list, I'm seeing a lot of these stocks below the negative GEX level. So obviously that is bearish, but we're approaching some negative GEX levels on a lot of these stocks. So that's going to be key for us to at least stay above if you're a bull. And if you start seeing these losing these negative GEX areas, then obviously I anticipate more weakness within the overall individual equities, as once you get below this negative GEX area, you enter a more put dominated negative gamma environment, which will be hard to recover from overall for the rest of the day. Again, going through these, Amazon below transition, Microsoft below transition. So you see all of these stocks are below transition and in trans, as well as zero GEX. So you're in a more negative put dominated gamma environment. Now, if we start recovering these levels, then we could quickly move back to the upside with that reflexive move as we see puts closing. And then you would need to see out of the money call speculation really start to come into the complex. And that's why we monitor these transition levels. That's why we monitor these zero GEX levels. That's why we monitor the index levels, because that gives us an overall understanding of what type of environment are we in. Are we in an environment that is more conducive of upside appreciation, or more conducive of downside levels moving to the downside in negative gamma put dominated? Or are we moving into a zero balance environment where we're above zero GEX, or we're moving into a positive transition environment where we're entering more positive gamma call dominated structure with the possibility of price appreciation? So again, these levels overhead will become key points for rejections. So those are our if thens. If then you get above it, then obviously you're moving in a more conducive environment or a more negative environment. So that's how we use those for our trading plans for today. So moving on, obviously Tesla below 0 gex, but you see it's above the negative gex. So we're kind of in no man's land. This can be a choppy area back and forth, just market participants transacting. And then until you get back above a more zero balanced or positive environment or below a negative environment, you can just chop around between these two levels. So that's basically our trading plan for today. Let me go back to the SPX 0 DTE. We'll look at pre-market here. So we got our first bounce there at 63.76, slightly bounced up towards 63.90. So again, 6,400 overhead will continue to be a weight, and we'll watch that for the first area for a move back to the upside. And then you see SPY is still above COTMP and negative gex, so that is a little bit more positive, but we're below 0 gex and intrans, so that's obviously negative, and we're still in a not conducive environment for significant amount of price appreciation there on SPY, QQQ, and then the IWM is below 0 gex also, so we'll continue to watch that, but approaching COTMP, which is where out of the money puts go in the money, and we do historically see some monetization there. So you see SPY approaching that as well as COTMP. So, all right, well, hopefully that helps everybody navigate the day. Again, I'd be cautious as we're below 6,400. We'll be watching the market trend model as it was cautionary heading into today. So we discussed that, as well as where we're at within the overall structure and complex, seeing erosion of the structure, as well as the delta balance. Those out of the money calls speculation was drying up last week. And now most likely we're seeing out of the money put speculation come in and the key levels overhead for today. So thanks everybody for joining us. Let's make it a great day. Hopefully we'll try to go live midday with a recap, maybe around 1 o'clock. Sign up, like, and subscribe on YouTube as well as X. You'll be notified when we go live for that content. And then make sure you check out all of our content from last week. If you're just joining us for the first time, we do pre-market prep every day, as well as a midday recap review if our team is available. And then we always do the post-market recap, where we go through the day, the price action, how our tools helped us navigate the SPX option structure, and some trades that we took for the day. So sign up and check those out also. And then as always, join us in our Discord, 14-day free trial, all the tools turned on, gammaedge.us. We'd be happy to have you. A large trading community with traders with extensive backgrounds, from new traders all the way to experienced traders, former market makers, money managers, as well as new traders just trying to navigate the SPX options structure. So, all right, thanks everybody. Make it a great day, and we'll see you later.